Welcome back to the Money Show, and on to the first segment of the show, we are getting you the Meet Your Fund Manager segment, where today we are being joined by Mr. Santosh Singh, who holds a rich experience of more than 15 years in the mutual fund industry, and at Motilal Oswal is a part of 4 funds, namely Motilal Oswal Focus Fund, Balance Advantage Fund, as well as Equity Hybrid and Multi-Asset Allocation Fund. In that, if we talk about the Balance Advantage Fund, then that AUM is close to 800 crores. So let's understand that what is the investment strategy regarding the Balance Advantage Fund, because in the past 1 year, it has not just given you great returns, but has beaten the benchmark indices by giving you more than double the return what the benchmark indices has given. So with this, let me welcome on board Santosh. A very good evening and thank you so much for your time. This is Shrishti on the other side. First of all, if we can dive deep into your Balance Advantage Fund returns, then like I was highlighting for our viewers, then it has given great returns of almost 23%, and very interesting to note that out of the 4 funds that you are a part of, the most of the allocation that we can see in the mid and the small end of the market is in the Balance Advantage Fund. Is that the strategy that you have been following since the inception, and because of the boom that we have seen in this end of the market, this is because that this fund has performed so well?
So see, Balance Advantage Fund is an asset allocator fund. So first we need to understand that it's an asset allocator fund where what you're trying to do is you're trying to reduce the standard deviation of the fund, right? So standard deviation of this fund will be significantly lower than Nifty standard deviation. So that's what the first thing you're trying to do, and allocate between equity and debt. As a strategy which we follow, we are very active investors. We don't passivize any bit of either the equity part or the debt part, or the sort of hedging in this particular fund. So we don't do any passivization. So what has worked for the fund is that it's not about mid, small, or large. See, our allocation in the small cap space will be closer to 20-25% to 20 to 30% has been the allocation in this fund in the smaller cap space, right? So the idea has been simple to find stocks where we can generate money rather than sort of track the market. So with that basic idea, we are trying to run the fund. The equity allocation strategy is also very simple. We get into profitable segments with high profit growth rate and low earnings. So the low P ratios. So this is the basic strategy we run the fund with. So that's how we are running it.
Santosh, but since it is Balance Advantage Fund, and you rightly mentioned that the main focus is actually to get that standard deviation in control, and you have that debt component as well as a part of your Balance Advantage Fund. So wanted to know your strategy that amongst the holding between the equity and the debt side, what sort of a ratio that you try to maintain for the Balance Advantage Fund, and how do you rebalance the same when there are variations?
Okay, so see, our allocation between equity and debt is based on our own proprietary quant model, which we call Motilal Oswal Value Index, and that's published daily on our website. So you can actually go and see there if any investors want to see that what our allocations would.
Okay, so maybe that line is a bit patchy with Santosh, but we are trying to get him back. The question that we have put to him is that how does the fund tries to manage the allocation between the equity and the debt side of the business? So we have Santosh back with us. Santosh, go on and help our viewer understand that what helps you in this decision making.
So I was explaining that we use our own proprietary quant model, for allocation between equity and debt. That's the core for the allocation part, right? And that model is based on 3 fundamental criteria. That is price to book, price to earning, and dividend yield. We use all the 3 to see how the markets are positioned, and based on that we actually try to position our fund between debt and equity. right? If you look at the fund, current equity allocation will be closer to 55-56%. Uh, so, and then that's based on the MOBI index, the Motilal Oswal Value Index, as well as the discretion which I have. If I find that the markets are traditionally getting into some area where I might want a lower or a higher allocation. So that's how we determine the equity and debt allocation. The allocations can move from normal circumstances from 30-35% to 75-80%. This is the range in normal circumstances it moves from into. Uh, and for last 1 year, actually, the markets have been sort of the rebalancing we do.
Okay, we will try to get Santosh back, but what all we were discussing is that how the fund actually manages to make that decision that how much should be the contribution on the equity side and how much the contribution should be on the debt side, and how does the rebalancing strategy at Motilal Oswal Balance Advantage fund works. But if we talk about the returns, then the returns have been really spectacular, because in the past 1 year they have given a return of almost 23%. And if we go with their allocation in different sectors, then what I can see is that finance has their major sector allocation of almost 11%. Auto components has the 10% holding. Insurance, wherein Star Health is one of the stocks in their focus list, has 10%. But Santosh, you are back with us. Continue with your answer.
Seems like the rebalancing is happening on my bandwidth as of now. Okay, we were talking about rebalancing, right? So rebalancing you can do on we do it quite frequently, because we use derivatives for rebalancing. And I think I was audible when I talked about the Motilal Oswal Value Index, which we use for our allocations, right? Current allocation between on equity, net equity is around 55-56%. This is the current allocation of net equity based on the indications from our proprietary model. So anything sort of, I don't know where I missed or what I missed. So that's where I'm slightly confused whether that what I have spoken or not spoken. So if you can help me with that. Hello?
But post the rebalancing, we could finally have your take on the distribution between the equity as well as on the debt side. But talking about the equity and what the data I have, Santosh, is that most of your allocation or major of your allocation is on the financial side as well as auto components, forming almost more than 10% of your portfolio. Apart from that, you have exposures in pharma, transport, IT services and more. But wanted to know that going ahead, any sector that you believe can have more allocation in your portfolio or has the potential to perform in a better manner? What's your sector-specific approach at this point in time?
So I run with slightly contra views, right? So because of that reason, what you will find is that the most underperforming segment of the market might be highest weight in my portfolio. And that's why what you'll find is a company called Star Health will be the largest weight in the portfolio because it has been a stark underperformer in the year. What we try to do is we try to find companies, some of the great companies, where the markets have turned negative, and we try to sort of get exposure to that. So currently, if you ask me, I'm bullish on financials, but not lenders, because the fund is quite underweight on lenders. I'm bullish on all other part of the financials. So we have a large exposure to insurance. We have large exposure to capital markets through Bombay Stock Exchange. And IT is another sector for where I'm quite positive. And that is an area where we have incrementally become overweight. Vehicle side, and that's why you could see one of the largest weight there.
Okay, it's interesting to note that IT is one of the spaces where Santosh and his fund has gone overweight now, and nevertheless, in the past couple of weeks, we are seeing the IT counters are performing well. But Santosh, before we let you go on that, wanted to understand the strategy regarding the cash holding, because what I could see is that almost 4% of the total AUM is you are holding in cash as of now. So is that something? Is that some percentage near to that we always see you holding this much of cash in your portfolio, or it gets skewed when you find better opportunities as well?
There is no fixed criteria for cash holding. It's just that I'm not so bullish on the markets, and that's why the index shows this our prop model shows our exposure to be somewhere, and I'm not so bullish, so we have kept some cash there. But certain generally we don't keep more than 1 or 2% cash in the fund. Generally we are fully deployed fund, but as of today, as of now, we are slightly higher cash in the fund.
That you're not that bullish and still looking out for opportunities, and not much opportunities left in the IT now?
That's why the fund has some contract contours to it, right? So the areas where we are invested, our highest overweights are the areas which have not performed at all in the market. Even in the past, if you look at the fund performances, has come from some 7, 8 stocks which were not being not being even bought by anyone. So we have slightly contra mindset while running the fund, right? And that's why we find opportunities in the market. I might not be bullish on the market, but I have a lot of stocks where I'm quite bullish on, and we tend to buy and wait for our time because we are buying some of the best companies in the industry.
With this, we let you go on that, and thank you so much for all your time and helping our viewers understand that what is the strategy behind Motilal Oswal Balanced Advantage Fund and what's your strategy as well. Great having you on the show, but with this, viewers, it's time to slip into a very short break in this edition of The Money Show. Don't go anywhere. As we come right back, it's time to take all your portfolio related queries, so stay tuned for more.